Hey! Today we're talking about investment restaurant because investing is just like going to a restaurant. Your first step is always to try and decide where you want to eat.
When choosing a restaurant, there's a couple of things you look at. The first thing is ambiance. What is the atmosphere like? Is it a nice place to be? Is it the feeling that you want for that specific evening that you want to go out? Second thing is cleanliness. Nobody wants to sit at a dirty table or receive a dirty menu. So you want to make sure it's nice and clean when you go eat there. The third thing is the service. How's the service? Do they come immediately to your table? Do you have to wait long or call the waiter every time you want something? How friendly are they? Do you feel welcome? Then the menu, of course, because if you feel like pizza, you're not going to go to a steak restaurant. So you want to make sure that the menu is what you are specifically looking for in that meal. Then lastly, the cost. When it's a good month and you've got lots of money, you go to a good restaurant, or otherwise you might want to go to a restaurant. Well, good is not always better. Cheaper or expensive doesn't necessarily point to the quality of the food, but my point is then you go to a restaurant that's slightly cheaper if your budget doesn't allow it. An investment restaurant is the platform that you choose to invest. So the platform is just a restaurant. You haven't eaten anything when you enter the restaurant, so you haven't invested anything yet once you've selected the platform. It's just the administrator, the place that's going to help you and give you access to the menu, the funds that you're going to choose to invest in. So when you choose your platform, you specifically look at the ambiance, just like you did with the restaurant. So you look at the experience you get when you deal with a company and the name they have out there, their reputation. You will also look at the cleanliness. Look at how transparent they are. Is everything rightly available? Is it difficult to get information? And is there any hidden fees or hidden information that you're not aware of? And the service, that's so important because if you want to have a statement or make a change or add money or withdraw money, you don't want to have to wait days on end. You have to be able to maybe even do it yourself online with a press of a button, quickly get what you need. You have to have good service. It's just going to make your experience so much better. And then the menu, what do they have available? Do they only offer their own funds? So they only have their house special, their chef special available? Or do they offer other funds as well from other chefs, other companies that you have access to multiple choices of investment so that you can diversify properly? And then lastly, the cost. Your access fee or your service fee or your platform fee or your administration fee, that's all the fees that they tend to call it. What is that fee and how does it compare with your options? The next step is when you go to a restaurant, to check out the menu. Choosing what to eat depends mainly on how hungry you are. If you're very hungry, you're going to look at starters, mains, desserts. You're going to look at steaks and things like that. If you're not very hungry, you're just going to have a salad or maybe just a starter or maybe just a piece of cake or maybe just a toasted sandwich. The second thing you usually look at when you choose what to eat is how much time you have. If you're in a hurry and it's quickly before a movie, you might go for a burger and chips. That's it, with a Coke or whatever. Okay. Or you might have lots of time and think, let's have some canapes. Let's have some steak. Let's have some dessert. Let's even have coffee afterwards and drinks before. And then you will also look at what you can afford. If it's a tight budget month, you'll probably just have a toasted sandwich and a milkshake, okay, to share. If you had a good month or you had a bonus and you want to really treat someone to a good meal, you will choose differently. And then lastly, the variety. You will definitely look at, look at this, look at that. If they have sushi and they have steak and they have whatever, you might choose a variety of food, but that will definitely play a role in your choice in what to eat. Choosing what to eat in the investment restaurant is determined by exactly the same factors. Again, firstly, how hungry are you? So your risk appetite plays a large role in your investment choices. If you are scared of losing money and you don't want to risk a lot, you are not going to invest all your money in just growth assets that's got high risk of loss of capital in short terms. If you have a high risk appetite, so you like, I'm in for this for the long run, let's put in a lot of money into this and let's see where it goes, and I understand that it's going to dip and I understand that it's volatile, I can handle it, then you will choose more growth assets. The second thing is, how much time do you have? I mentioned that already now, but if you invest, time plays a large role. Because if you don't have a lot of time, you won't have enough time to sit through the volatility of growth instruments. And then you might lose capital because you might need the money at the exact time that the market is in a downturn. If you have a lot of time, it doesn't matter because you can sit through the cycles over the term and recover from any downturns and exceed your previous high levels in the investment over time. But in short times, you have to invest more and conservatively with things that have capital preservation elements in them rather than purely capital growth. The third thing, what can you afford? There's always minimum requirements in all your platforms that you have to invest. So your platform choice will affect your fund choices and will affect what you can invest in depending on the amount of money you have. If you don't have enough money, you might also not be able to diversify that much because it doesn't help if you just put R1 in capital growth and R2 in capital preservation. You need quite a bit of money to diversify a portfolio properly, especially when it comes to shares. Because technically you want to buy the whole market because you don't know which specific sector is going to do well or which specific share in that sector is going to do well. So you want to buy a little bit of everything unless you have a very good hunch and you're good at timing the market, which most people don't get right most of the times. You want to make sure you buy a basket of shares and hopefully most of them do well. And those that don't do so well are outperformed by the ones you have in your basket that does do well. Then lastly, variety. Again, if you can't diversify, you have a smaller chance of hitting that target. The more arrows you aim at that target, the higher the chance that you can hit the bull's eye. Okay? And that is diversification. You need a variety. Step 3 in going to a restaurant is picking a chef. And yes, you don't always know who makes the food, but you are not going to a pastry restaurant, which obviously uses a pastry chef, if you want to eat sushi and you need a sushi chef for that. So in a way, you are picking your chef when you choose your restaurant or choose what to eat. When you sit in the restaurant with a menu in front of you, you have different sections and it depends on the type of restaurant that you have. But there will be starters, light meals, main meals, platters, and dessert. And you have to choose, am I going to have a starter or not? Am I going to have just a light meal, maybe a combination of the two? Am I just going in it for a main meal and maybe a dessert? Do I want a platter with a variety of food on it that I maybe can share? Or do I just want dessert? I'm just list for something sweet and I want to have that with some coffee. That is all going to determine what you are going to eat in your restaurant. The chef in the investment restaurant is the fund manager, the person making the food. So when you choose a unit trust, for instance, to invest in, you will get a starter unit trust like a money market fund. And then there will be different kinds with different chefs, different fund managers, and you have to decide which one you want to use. But usually when it comes to money market funds, you can only invest in the fund whose platform you use. That specific one's money market fund on that platform. There's obviously cash that you can invest in a bank, but then you have to start to look at other kinds of risks and returns and your interest rates and the term that's connected to it and things like that. In your light meals category, you will get fund managers that have made a combination of low risk assets. The asset manager will decide what kind of bonds they want to put in there, the duration of the bonds, what kind of amount of cash versus bonds they want to put in there, maybe some property with rental income. Will there be any offshore exposure? The fund manager will decide on that. So that's why you'll have different kind of light meals and you have to choose the fund managers meal that suits your need the best. Then main meals, your high risk funds, your equity funds, you'll have a variety of equity funds. Some will pick specific shares. Some will only have local shares. Some will have global shares. Some will lean towards resources. Some will lean towards industrials. Some will actively manage it by buying and selling all the time. Some of them will be more passive and have a long-term view, house view, and say, these are the stocks we're holding. We'll just change the weightings a little bit. That's important to look into as well when you choose a main meal, your high risk equity capital growth type of fund. Then a platter. A platter is a fund that's got a little bit of everything in it. And you have many asset managers, various ones, where they'll have these combination of funds in there. They're usually perfect for pension fund type of retirement type of investments, because they meet all the regulatory requirements. But in there, you'll have a lot of assets in different weightings. Some of them might be high equity, which means they have more equity than they have cash and bonds. They'll be low equity, where there's more cash and bonds than there will be shares. So you have to look at what your need is and then pick the specific platter that you want. But your asset managers might have different views as well. Just that you can have a platter that's focusing on white meat or a platter that's focusing on vegetarian type of foods, you will get different platters like that where people will lean, asset manager will lean into a specific direction. And that is where you need advice to know which one to choose. And then obviously once you have all these things in your portfolio, you need some dessert. Those are those extra little things like exchange traded funds, passively managed investments, your direct share portfolios, or then of course direct property. So once you've checked out the menu, you call the waiter and you place your order. The job of the waiter in the restaurant is to firstly read you the specials, tell you what is on special, and to serve you. The service must be good, otherwise you won't tip him well or you will complain. And then he must give you recommendations. He must know the menu and tell you, if you're very hungry, that portion's going to be too small for you. Or if you're in a hurry, that's going to take too long. He needs to know the menu and make recommendations. And then lastly, you will only tip him if he does what he's supposed to do. So his tip will be determined by the service that he offers. The waiter in the investment restaurant is like your financial advisor or your investment specialist or your asset manager, depending on what kind of relationship you have. Are you doing it directly with a company, the platform, or are you dealing via a specialist, a person that can help you make your decisions? This waiter's job in the investment restaurant is also to tell you about the specials, in the sense that where you make your choices, he must advise you on your options available. So he must tell you, listen, based on your risk profile, or your risk tolerance, or your risk need, which means sometimes you have to take more risk to get to a specific goal. If your goal doesn't agree with your risk profile, then there's a discussion that needs to happen for that. He needs to tell you, this is how we're going to reach that goal, and therefore these are your options that you can choose from. And if there's a special, a house special, like a cheaper fund management fee on a house fund or house view, then he should tell you about that. Then the servers. Are you getting regular reviews, or that you see this person once and gave you advice and then you never saw him again and he's earning a fee? So you must make sure that this guy's got a good reputation of getting back to you. And I know I'm referring to male, but it could be female. Then getting back to you quickly, answering your emails, giving you regular reviews, following up with you regularly. And when you talk to him about your investment, is he well informed about what's going on? Or if he isn't, she isn't, does she find out and quickly give you the feedback that you require? So lastly, there's the recommendations, just like the waiter would have done. So guidance. So if you come then you say, I want to make a withdrawal, to guide you as to, is this the best investment to draw it from? Is that the best investment? Is it now the best time? You want to add money, maybe change a contribution, tell you, put it in here, don't put it in there. And with your regular reviews to tell you, I think your goal has changed, so we need to make amendments. So let's readjust your underlying investment choices. Lastly, the tip. There's a large variety of remuneration packages out there when it comes to financial advisors or financial planners, or what you want to call them. It's either a percentage of your investment fee, or it's invoicing by the hour, service delivery, and they have to earn it. They have to be able to prove that they really deserve that fee. And you must remember, there's a lot of stuff they do that you don't see. They interact with the companies, the platforms, the fund managers. They stay on top of it. They have to do product accreditations that they write all the time. So maybe you only hear from them once or twice a year, either when they want to make an amendment or you want to make a change, or when it's time for your annual review. But behind the scenes, there's a lot that they have to do just to be able to give you that advice and to make that recommendation. So bear that in mind when you choose what you want to tip that waiter, because there's more than meets the eye on what's going on behind the scenes. So you've decided on a restaurant, you've looked at the menu, you've chosen what you wanted to eat, you called the waiter, you placed your order, and the food arrives. Now all you have to do is eat, enjoy, and of course pay the bill. Now, included in your investment, there will be various fees. Fees to the asset manager, platform fees to the platform, the advisor fees to your advisor. If you use the discretionary fund manager, a fee to them. So it's important that you have a look at those fees before you place your order in the investment restaurant, and make sure that the effective annual cost is not too exuberant, but sometimes you have to pay a little bit extra for a better service or for a better product. Ultimately, it's your choice. Enjoy.